earnings seasons to It's the Economy. Some trends from the first set of second quarter results show some disturbing takeaways for India's macros. For instance, the top four IT companies, Infosys, TCS, HCLTech and Wipro, tell us that together they have reduced their headcount by 22,000 people in Q2. TCS 6,333, Infy 7,250, HCLTech over about 2,250 and Wipro over 5,000. Now, separately, FMCG company results that came yesterday, HUL and Nestle have reported very low volume growth, 2% and 4%. Also, as we now know, the global cost of capital has shot up with the US yields rising, and this has forced, for instance, Indonesia, the first Asian emerging market to raise rates. India has effectively raised rates by tightening liquidity. As you can see, the interbank repo rate, the interbank call rate is at 6.75. It ought to be at 6.5, the repo rate. So, are the clouds gathering for a likely lower than expected GDP growth in the second half? All these are anecdotal evidence, but I'm asking this question to two macroeconomists, Sakshi Gupta, the Deputy Vice President and Senior Economist at HDFC Bank, and Indranil, the Chief Economist at Yes Bank. Indranil, Sakshi, thank you very much for joining us. First question that, Indranil, you saw the kind of headcount fall that IT companies reported, and all of them said they have not issued letters to the freshers. They will not, some of them have said they won't go to the campuses in the coming hiring season. Is this giving you a sense that we are in for a difficult next few quarters of growth?
Obviously, this will have an implication in terms of the way we were expecting consumption demand to move. Now, obviously, again, we are sort of in a phase where global slowdown is likely to hit. And even though some of these IT companies have reported a good deal pipeline going forward, I think the overall atmosphere that is building up is that companies or the deals relatively are at a value size which is relatively lower than expected levels. So these are some of the factors that will definitely affect consumption behavior going forward. And I think out of COVID, the expectation that we had that we'll have a more balanced growth, that probably is still not happening, which is clearly evident by the fact that the FMCGs have been reporting relatively lower volumes. The upper end of the income pyramid continues to spend quite significantly, and that's holding up the consumption demand to an extent. The lower end is surely suffering, and rural economy is possibly one of the worst hit, in my opinion. So these are some of the factors that could actually lead to lower GDP growth. However, there's a lot of uncertainty in the data that flows. For instance, the IMF has actually now moved GDP numbers higher by 40 basis points. The RBI holds it at 6.5%. On the other hand, we will look at GDP being at a 6.1 to a 6.2%, with likely to be a second half, which is relatively much softer than what we saw in the first half.
Okay. So I'm just asking you one word. Is there a downward bias to your own forecast? What's your forecast? Is there a downward bias?
To a certain extent, we have taken most of these into consideration as we did our numbers before. And as the RBI clearly says that the pass-through is still not fully done. And
yeah. So what's your number?
It is more likely to be 6.1 to 6.2% is what we are looking at.
Okay. Sakshi, I'm presenting the same data to you. Headcount numbers lower, is it likely to hit consumption further? And if you can also analyze the consumption trends already available to us, which somehow seem a little under the weather going by the recent numbers. What's your take on second half growth?
Right. So I kind of agree that, yes, given the, tightening financial conditions globally as well as in India and the trends that we are seeing on the formal labor sector side. And also, mind you, not forget the risk of, higher commodity prices, especially oil with the geopolitical tensions that are going on, does present, a downside bias to how growth is going to perform over the coming quarters. That being said, I think we also need to recognize and understand that there are a lot of, divergences and nuances to the data that we are looking at. And I agree with Indranil that, it is not uniform. There is a lot of differences. So, for instance, when we are looking at formal sector employment, in the recent data also shows that while urban unemployment rates are going up, on the rural side, we've actually seen a slight moderation in the unemployment rate. Similarly, I mean, we are seeing hiring intentions go down in, software and the IT sector, but at the same time, you have sectors like construction, oil and gas that continue to see very strong YOY growth in their hiring. So it's very mixed at this stage. On balance, I would, still hold on to my 6.3% growth number for the whole year. I think that the second half of the year usually tends to be, stronger in terms of the sequential momentum because there are, seasonal effects. But compared to last year, perhaps this time the sequential momentum is going to be lower.
Okay. What about the next set of factors that are upon us? US cost of capital at 5%. Very clearly, Indian authorities, all Asian economies will have to react. Indonesia has reacted outright with a rate hike. India is not announcing a rate hike, but effectively there is a 25 basis rate hike for the past quarter. Repo rate has been at 6.75. Do you see, Sakshi, first to you, this having an impact on consumption in the days to come as credit card cost, loan cost goes up, home loan costs go up? Are you seeing an impact?
Right. So, as I said, yes, we are looking at tighter financial conditions going forward because, the RBI has also gone ahead and said that the impact of the past rate hikes hasn't really filtered through. And clearly there is this intention to tighten liquidity further and raise, effective interest rates in the economy. So, I think in certain segments, you are going to see, an impact on consumption. While I think taking the example of, let's say, the housing sector, there are segments where consumers don't tend to be so sensitive to interest rates. Again, at the broader economy level, yes, tighter financial conditions do mean that there will be, a consumption slowdown. I think credit growth still continues to remain very high. And I think we will start seeing some moderation as we move into the coming quarters. But then again, you're going to see, some segments of the, credit portfolio that remain resilient despite, the interest rate increases because they are less sensitive, to the interest rate.
Yes. Yes, of course, consumer discretionaries will do well. But I can point out to a couple of discretionaries that have not done well. We got the travel numbers, didn't we? And there is a Citi report that has hit us just this morning, which is pointing out two areas of urban consumption getting hit. One is services exports are not growing anymore. The last services exports number we got is barely 1% higher than year-ago levels. And the second one is travel numbers are also moderating for September compared to August. So, Indranil, until now, the worry was rural consumption has not picked up, and Hindustan Unilever seemed to say the same thing in their earnings call yesterday. But are you getting doubts over urban consumption also?
No, rather than sort of segmenting it through the urban versus the rural, I think the essential point here is that because of the higher inflation and because of the higher cost of capital, the point is that the essentials are probably getting hit to a large extent. But as Sakshi also mentioned, that there are pockets definitely where the demand for the housing remains strong. And more in terms of the affordable housing, I think the government is trying to soften the blow by the interest subventions that subventions that they have started to do in terms of the housing sector. So yes, again, Sakshi, I think is a point taken forward. The urban consumption demand in terms of the asset building will continue. So the critical factor to look at is more in terms of how much the essentials are basically hit, and that I think is remaining crucial in my opinion.
Is that a big factor then? Already our government has announced the numbers we got, and these are still source based. But Minister Hardeep Puri confirmed that the plan is there. 60,000 crores interest subvention over 5 years. The actual amount that will come this year itself is going to be very less because the plan has to be announced and then banks have to be approached for low-income housing and then they will give a loan subvention. It doesn't seem to be happening this year. So do you think this year's growth is kind of a prisoner to the government announcing some pre-election SOPs, Indranil?
I wouldn't call it as a pre-election SOP. I think it is more like the managing of the economy so that along with the global atmosphere that is building up in terms of the uncertainties and the crude also moving to $93 a barrel, I'm talking about the Brent, it is how you use the fiscal policy to soften the blow on the economy, and rather than a sizable downside, you actually manage the downsizing of the economy to that extent. So I would hesitate to call it clearly as an election SOP because this will have a relatively longer term implication in terms of the benefits.
No, I agree with you. If it's only a question of reducing the excise duty by 1 rupee or 2 rupees, like they did in the previous instance, it would be softening the blow. But who is to say that they are going to stop with only a fuel subvention or a subsidy? Last time we had the PMGKY, which was 2,000 rupees given to every family before the vote on account started. So some such a scheme is widely expected. But very quickly, Sakshi and Indranil, I want your next year numbers from you. You're standing at 6.1 and 6.3 for the current year. Sakshi, next year's numbers?
So for next year, we are looking at 6.4% as of now.
Okay.
There are, of course, base effects. Yeah, there are, of course, base effects that would still be at play. So, it gets reflected in the overall growth number.
Yeah, and we don't know how global growth, what shape it will take. Indranil, your FY25?
My fear is that I would be looking at a 6% because I think to a certain extent post-COVID, there is a deadweight loss that we are carrying. And we are expecting the global growth to be relatively more slower in the next calendar year compared to the current calendar year. And with the higher for longer sort of message playing out for a relatively larger period of time. So I would be looking at a 6% rather than looking at growth being higher compared to this year.
Okay. Thank you very much, Indranil and Sakshi, for going through the early trends that we are getting from the Q2 numbers. The verdict from the economists is that at the moment they are not changing their GDP forecast, though there are fears, some red flags over the second half pace of GDP growth. 6.1 for Yes Bank and 6.3 from HDFC Bank. Remember, the RBI stands at 6.5, so does the Government of India. But the street is not convinced. If anything, there is a downside bias to expectations. Wrap up on Bazaar on that note. Chartbusters up next.